Hi and welcome to this trade example on the 16th of August 2013, and this was the Euro US dollar. If we consider the market environment, I was looking to buy the Euro US dollar at this level here, my blue level identified on the 4-hour chart. So I was looking for strength in the euro and weakness in the dollar. So let's go look at the US dollar index and see what's going on there. We can see we have some weakness in the dollar. We have some lower lows and lower highs, and then price moved down, and at roughly the same time as I was looking to take the trade on the Euro US dollar, which is marked by this gray vertical dotted line, price had made a swing high here and then moved lower, and then price came up to this level and showed some slight rejection. And so I was feeling confident enough to sell this currency pair when price came up to test this level and follow it down. I figured with a relatively tight stop I would have a shoot at this trade. So the US dollar index was supporting my bias to buy the Euro US dollar. We look at the market framework. I have marked off some historically respected levels on the 4-hour chart. We can see this level here, this blue level up here, has showed some beautiful respect historically. Price came to this level here and spiked up to it and was rejected and moved very strongly down. This is some news out of the US. And then price finally moved higher and then started to creep down and retest this level before continuing higher. And so I had this level here, which was my historically respected level. If we consider some technical study levels, if you draw the fibs from this low to this high, price comes back to the 38% Fibonacci retracement, which is a nice overlap at precisely this level. Additionally, the previous week Fibonacci retracements show that this level lines up very nicely with the 50% retracement for this currency pair. So we had two technical levels lining up nicely with our historically respected level here. If we go to the daily chart, we can see that we're in a very nice uptrend here. Price reached these previous highs here and showed some rejection and moved lower for quite some time. And we had this big move higher here, which is probably the 62 or the 79% retracement from this move here to this move here. So in the daily chart, price is moving up. If we go down to the 4-hour chart, we have this nice upward channel. Price is moving higher, but we do have this new swing low, which actually, technically speaking, puts us into a downtrend. Until price breaks these highs here, we're still in a downtrend. So any trade that I do opt to take in buying this currency pair, I'll have to be very careful, have a tight stop, and take my profits out of the market as soon as possible. If we go here and looking at the momentum for this, looking at the momentum on the hourly chart, we can see we have a very strong move up here. We have a slightly weak pullback, and then we have a strong push higher, but then another strong pull lower. So price is actually looking quite neutral at the moment. Again, so we'll have to be very careful any trades that we take at this level. If we look ahead, price ultimately came very close to the level that we were looking at, so I'd be most certainly looking to enter a trade at this level. This 50% Fibonacci retracement from last week seems to be a very nice technical level, so any entries in and around this level would be decent. The placement of our stop in this trade is actually very difficult. We can of course choose a deep Fibonacci retracement, perhaps the 50% retracement, but this gives us quite a wide stop. We're going to have to go up to just shy of 30 pips, and if we're looking for a 1-to-1 risk ratio, we're going to have to pull back up to here, and I'm not certain that price will do this. And so we could have just a standard 20 pip stop here. Our target would be the next technical level here, just shy, so it would be here. So we'd have a 1-to-1 risk reward ratio, and as soon as we filled this position here, we'd have to move our stop to break even immediately, because price could most certainly begin to move lower here and eat its way back into this price imbalance. So two positions, the entry here, the order is filled, we have our 20 pip stop and our first target of 20 pips. When this target is hit, if it's hit, the stop is to be moved to a break-even trade, so we have a risk-free second half of our trade. But that's it for this trading example. Thanks for watching, and I'll see you in the next tutorial.